We have some thoughts on the market now from David Brochu of Strategic Point Investments in Providence. Now, there was some hesitation, I guess, early in the trading session yesterday, but then the reassurance came back.
Yeah, what happened yesterday is the Treasury, the Fed auctioned some bonds, and it didn't go as well as expected. It was oversubscribed, but it was much weaker than usual, which is starting to indicate perhaps the markets are getting a little tired of our auctions of government paper.
Explain that in more detail. What are they getting tired of?
Yeah, all this money that the government is spending has to be raised somewhere. And the way they raise it is they auction off bonds, and they auction them off anywhere from 30 days all the way out to 30 years. And yesterday they offered 2 to 7s, I think. And there was, typically they put in bids, and you want to see a lot more desire for the money than there is bonds available. Yesterday we had 2 to 1, which is, you know, okay, but usually it's much, much more than that. So it's meaning the markets are saying, geez, maybe we have enough U.S. paper for a while.
Now, don't countries like China buy up these bonds and invest in them in large numbers? And is that good or bad? And how did that go yesterday, if you know?
Well, it's kind of a devil's bargain. The Chinese get a lot of money from us because we buy a lot of stuff from them. So they have a lot of dollars, so they turn around and they buy treasuries. We need them to do that because we need to finance our debt so we can borrow our way out of this problem. The Chinese have expressed some discontent with that recently because they're concerned we're going to inflate our way out of this, but they don't really have any choice, so they'll keep buying our bonds.
Well, that's interesting. You say borrow our way out of debt. Now, that sounds like a contradiction.
Oh, it absolutely is a contradiction, and it is what is going on. We have for 25 years now just used low interest rates and more debt to keep the economy growing. This crisis is so bad that the federal government, the Federal Reserve, has resorted to borrowing money to buy our own debt, so that we can lower interest rates further and create more capital available to solve the credit crisis. And if it sounds crazy, it is.
Yikes.
Yikes is right. That's the correct response.
Is it going to work?
And oddly enough, to solve the credit crisis, it will, actually. The credit crisis is separate from the economy, and it probably will work, actually, but it's going to create other problems.
Oh, wow. Now, meanwhile, what are you telling your investor clients nowadays?
Unless you're a very good swimmer, or you absolutely have to, stay out of the water. We're very conservative right now. It is a treacherous environment. We're really political investing right now, not financial investors at all. We have to make decisions based on what Washington is doing, and Washington and Wall Street have a love-hate relationship right now. So it's a treacherous time. We're using this rally right now to pare back some positions. This is a bear market rally. This is going to unwind. We don't know when. The last one went on for years.
My pleasure. That's our business report for this Thursday, 26th of March, and now at 18 minutes after